Hello, my dear students, and welcome back. I know exams are just around the corner, and this chapter, National Income Accounting, well, it can feel a little bit tricky with all its different terms and formulas. You've got GDP, GNP, NNP, factor cost, market price. I know, it can feel like you're learning a whole new language, right? And it can be super confusing. You might be feeling a little bit overwhelmed.
But hey, tension nahi bacho. Don't you worry one bit. I'm here for you, and I promise that by the end of this little explainer, all these concepts are going to be crystal clear. We're going to break it all down step by step. So, you ready? Let's do this.
Okay, first things first. Before we can even start counting a country's income, we need to be very clear about what exactly we're supposed to count. So let's start with a really simple story about how things are made and sold. So look here, we have two kinds of goods. On the left, we have intermediate goods. Think of these as the ingredients, the raw materials. And on the right, we have final goods. These are the finished products, the things that we, the consumers, actually buy and use. The main difference? Intermediate goods get used up to create something else, while final goods are the end of the road. They're the final product.
And this picture makes it so clear. Just imagine your favorite samosa wala bhaiya down the street. The flour, the oil, the potatoes that he buys to make those amazing samosas, all of those are intermediate goods. But that hot, delicious, crispy samosa that you buy from him, that is the final good, because you are the final user. Simple, Anna?
Now, why is this difference so important? This is absolutely critical for one big reason. When we calculate the national income, we only count the value of final goods. Why? To avoid a huge mistake called double counting. Just think about it. If we counted the value of the potatoes and the value of the final samosa, we'd actually be counting the value of those potatoes twice. That's a big no-no and a mistake you definitely want to avoid in your exams.
Okay, so we know we're only counting final goods, but how does the money for all these things move around in the economy? Well, you can think of it like a country's pocket money just going round and round in a big circle. This simple drawing here shows the two main players in our economy. Households, that's basically all of us, and firms, the businesses that make everything. So we work for these firms, and they pay us salaries. That's our income. Then what do? We take that income and we spend it on all the goods and services the firms make. So you see, the money flows from the firms to us, and then it flows right back to the firms again. It's a perfect circle.
All right, now for the big one, calculating the gross domestic product, or GDP. Now, there are three ways to do it, but I'm going to let you in on a little secret. They are all just different roads, तीन रास्ते, that lead to the very same destination, एक मंजिल. No matter which path you take, you will always get the same final answer. To understand these three methods, let's just use the super simple example from your textbook. Imagine a tiny little economy with just two people in it, a farmer who grows wheat and a baker who makes bread. Now, let's just follow the money using this table. The farmer produces wheat that's worth 100 rupees. The baker buys 50 rupees worth of that wheat. That's an intermediate good for him, and uses it to bake bread that's worth 200 rupees. Now, if we just add up the total value of production, 100 plus 200, we get 300. But wait, that's wrong. We've double counted that 50 rupees worth of wheat. So to fix this, we have to calculate something called the value added by each person. So what is this value added? It's simply the new value a producer adds to the raw materials. And the formula is super easy. It's just the value of production minus the value of intermediate goods. So for our farmer, it's 100 minus 0, which is 100. And for our baker, it's 200 minus the 50 rupees he paid for the wheat, which is 150. So the total GDP is 100 plus 150, which equals 250 rupees. See? We fixed it. And this brings us right back to our three roads. The first road is the product method, which we just did. We added up the value added from both the farmer and the baker to get 250 rupees. The second road is the expenditure method. Here, we would count up the total money spent on final goods. In our story, that's the 200 rupees spent on bread plus the 50 rupees of wheat the farmer kept for himself. And what do we get? 250 again. And the third road is the income method, where we add up all the income earned. And in our simple economy, this would also be 250 rupees. Three different paths, all leading to the exact same GDP.
So, to quickly revise, the product method adds up all the value added. The expenditure method adds up all the final spending. And the income method adds up all the incomes earned. Easy peasy. Now that you're an expert on GDP, let's go meet its family.
So, now that you're good friends with GDP, it's time to meet its family. Just think of them as its close relatives, each one with a slightly different name and a slightly different job. Let's meet GNP and NNP. First up, we have Gross National Product, or GNP. Now, while GDP measures all the income that is made inside India's borders, GNP measures all the income made by Indians, no matter where they are in the world. So to get GNP, we take our GDP, we add the income that Indians are earning abroad, and we subtract the income that foreigners are earning here in India. That's it.
Next in the family is Net National Product, or NNP. Okay, think about the machines, the factories, the buildings that are used to produce all these goods. They get old, right? They wear out over time. This normal wear and tear is called depreciation. It's basically a cost of doing business. So, if we subtract the value of this depreciation from our GNP, we get NNP. It's kind of like the net or the real income of the country after you account for all that wear and tear.
And there's just one final tiny step. The price we pay for things in the market usually includes indirect taxes, right? Like GST. But that tax money goes to the government, not to the person who made the product. So to find the producer's actual income, we take NNP, we subtract those indirect taxes, and then we add back any subsidies the government gave. This final number is called NNP at factor cost. And that, my dear students, is what we officially call our national income. You've totally got this.
Okay, everyone, focus up. Let's do a quick question and answer round. These are very, very common questions in your board exams, so pay close attention. This section is going to help you get full marks.
First question, and this is a really important one. It often comes for 3 marks. What is the difference between stocks and flows? Come on, think about it. What's the answer?
Here we go. A stock is something you measure at a particular point in time. It's like a snapshot. For example, the amount of water in a tank right now. A flow, on the other hand, is measured over a period of time, like the water flowing into that tank per minute. So the total money you have is a stock, but your monthly pocket money is a flow. It's all about the timing. Okay, next question. This one will test if you really understood the first thing we talked about today. What is double counting, and how do we avoid this error? This is a super important concept. And there's the perfect answer, right on your screen. Double counting is the mistake of counting the value of intermediate goods more than once. And we avoid it in 2 ways, either by counting only the value of the final goods, like our samosa, or by adding up the value added at each and every stage of production. You should write this down. It's a perfect exam answer. I am so proud of all of you. You've done such a great job understanding these tricky concepts. Before you go, here's a fun little challenge for you. Just look around you right now. Can you pick one final good, maybe the phone you're watching this on, and try to list some of the intermediate goods that went into making it? Give it a try. You've totally got this. All the very best for your exams.